There you go. Hey, hello everybody. Hi, Kyle. Hey, Randy.
Hey, Victor, how are you?
Doing good, thank you. Um, hey there, Randy.
Hi, Victor.
Hey, so we are
Keep the go
live
when I'm
now.
speaking and then go on when I'm speaking.
Y- yes, can you? We can. Yeah, okay. Just so people are now joining the room. So, and for those who were here before, we had a technical issue before, and we are restarting this webinar. Sorry for the confusion, but now it should be working pretty well. If you guys can tell me where you are from, where you're based at in the comment section, just so we can have an idea, that would be perfect.
What?
There you go, Deborah. Hey, we have Deborah here. I guess Deborah, you were in Portugal. So we have some familiar names over here. We have Wendy, Drew, Joanne, and Marian. Hi, Drew in Portugal. Good to know. It would be good to know if you were already here in Portugal or still in America in the process of moving. But I can see that there are people from everywhere. San Francisco, Braga. Braga is where I used to live when I first moved to Portugal. Should be hot in Braga now, I guess. It's like the city we also face like extreme weathers, or either it's really hot or really cold. Um, so many people from America, yeah, New Jersey. We have Anne, Idaho. Oh, that's good to see you guys joining the webinar. It will be a very important one as we are going to be talking about finances, income, those important topics that it's really relevant to consider uh, before moving, but also, of course, after you're living in Portugal. Just wait for a while as people are joining in. And so we are gonna have this webinar in a very standard way. Basically, we are gonna be um, doing our presentation here and leaving 10 to 15 minutes at the end to Q&A. We did receive some questions already, so we are gonna be uh, talking and covering those questions. They're pretty popular. But I'm excited. This is a topic that I really like, and I'm gonna be covering the financial part, but also be tackling on some immigration rules in the end, in the Q&A. Oh, Jeff, we can see Jeff here from Texas, a dear client. We have many people over here joining. Just one more minute and we are gonna start. Yes, Deborah, this will be recorded. Thank you for asking. You are gonna receive one email with the whole presentation, and also we are gonna be sharing it on our YouTube channel. So in case you need to leave early, no worries. You are still gonna be able to watch the whole piece in the future. Okay, guys. So I will start this presentation. Let me just share my screen here. There you go. So today, as I mentioned before, we are going to be talking about um, finance. So basically, uh, people that are moving to Portugal, one of the most important topics are related to their finances, how to deal with the situation as they are going to be spending money in Portugal, and still most of them are going to be the source of income will be still in America, and that's why we have here Kyle and Randy to talk about this topic and let you know what's the best way to keep up with your finances while you were living here in Portugal. I have my notepad with me. I'm also gonna take some notes as I myself am one of those people who moved to Portugal, and it was 8 years ago, and that's when me and my wife we decided to move to Braga. I do have a legal background. I started as a lawyer here in Portugal. Nowadays, I work more on the business side, but still, I do have the legal background. I'm one of the founders of Viv Europe. It was me and two Portuguese colleagues that decided to start this company based on the fact that it is not as we kind of figured out that it's not that simple to relocate to Portugal, apply for visas, gather documents. So our main goal was to help facilitate this process for people that are willing to move to Portugal. And we did assist many American folks moving to this country. We are very happy about it. And still, every time that I'm always trying to learn, and this financial topic really is very important for me, and I'm really happy to be sharing the stage with my dear friends Randy and Kyle. I'll pass the mic to you, and welcome.
Thanks, Victor. Appreciate it. All right, Victor, I've got my screen shared. If you've got a way to let it in.
Hey, oh yeah, perfect. There you go, my friend.
All right, Randy, you want to kick us off?
Sure. Well, welcome everybody. And thanks for the kind introduction, Victor. We met Victor about, I don't know, 6 to 9 months ago, and through another organization, and he does a fantastic job with helping people settle in Portugal from the United States and from Brazil as well, as I remember. So we're here to talk about Americans that are moving into Portugal. It's quite a big amount of people these days. So let me give you a couple minute history of who we are, why we're here, and then I'm going to turn it over to Kyle, and he's going to cover some of the more detailed questions and thoughts that you would have. So Beacon Global Group is a independent investment advisory firm. What that means to the people on this in the audience is that we have a fiduciary responsibility to help our clients. Kind of like Victor, we got started in a similar way. I had a financial planning firm in the States that I had sold about 10 years ago that really focused on providing financial education for corporate members and public service members throughout the United States. I had sold that and wanted to always live in Europe. So just like the people in this audience, I pulled the trigger and moved to the Netherlands, and what became 1 year ended up becoming close to 8 years. I kind of loved the European lifestyle, but it was when I was in the Netherlands that, you kind of discovered that the local advisors, the Dutch advisors, weren't familiar with the U.S. topics, only familiar with the Dutch topics, and there were actually no U.S. licensed people in the Netherlands at the time to help out Americans. You know, I myself, I had trouble opening up bank accounts, investment solutions. So, you know, kind of looked at it as, hey, now that we sold one business, we founded another one that basically worked on servicing Americans that lived abroad. As a firm, we have approximately 60 licensed advisors that work with Americans abroad. And, you know, and this year we got very much involved with firms like Viv Europe and supporting Americans moving abroad. And was finding a very large influx of Americans looking to move to Western Europe, Portugal, Spain, France. And, you know, once you live in those places, and it's pretty easy to discover why you don't want to live there. There's been more people looking for our services almost daily, some for, you know, political reasons where they're not comfortable with the situation. Other ones were, hey, I was thinking about moving to Portugal anyway, and maybe I would just want to move things up. So, you know, we've been in the marketplace of helping, you know, many Americans move abroad. So have the expertise of speaking today. And one of the things that when you look at, you know, matching Portugal and the United States is, you know, how do you have comprehensive, you know, financial planning, wealth management that takes into account both countries' tax concerns, retirement planning, what do you need, income strategies and investment strategies that enable you to stay, you know, on the right side of the IRS. So with that note, we're excited to be here. I'm going to turn it over to Kyle, and I will come back in a little while to discuss a little bit more on just retirement planning. Thank you, Kyle.
Thanks, Randy. I appreciate it. Thanks for leaving me the fun stuff to talk about. So, you know, as you're going to hear a bunch of challenges facing Americans as they look to move abroad, I typically like to take some time to explain some of the concepts of why we're in the situation we're in, which should help start putting together the puzzle pieces and help us understand some of the things that we can and cannot do. So let's talk about the elephant in the room. The United States is one of the only countries in the world that taxes based on citizenship as opposed to residency. So what this means for you is that no matter where in the world you choose to go, you're always going to be required to file a return with the IRS. It doesn't necessarily mean that you will have to pay extra, but you will be required to file. Now, we're not tax advisors, but some of these concepts will help. So for example, to understand that this is just a generalization, but conceptually how citizenship-based taxation works. Your minimum tax obligation is going to be what it would be as if you were in the US. So think about that as a bar, okay? Now, if you move to a country with lower or no tax rates, you're primarily going to pay your taxes to the country that you're living in, but then you'll end up paying the US the difference, okay? Where this becomes an issue is that imagine you were a Brit and decided to move to a country with no taxes like Dubai. You would pay no taxes. However, an American that moves to Dubai is going to pay roughly the US the same amount of taxes that they would as if they live here. But not only that, the overlap of the two different tax jurisdictions limits a lot of the flexibilities in the tax codes that someone may have taken in one country or another. Now, on the flip side, if you're to move to a country with higher tax rates like Portugal, that would become your new bar, okay? Now, Portugal has a tax treaty in place with the US that will help avoid a lot of the double taxation. What changes based on that tax treaty is basically which slice of the pie each country is going to take. So there was also a regulation that instituted around 15 years ago called FATCA. So FATCA required all financial institutions in the world that works with Americans to then report back on all accounts and transactions regarding Americans. So this was done in an effort to stop terrorism and anti-money laundering. And so if you think about it, you know, back in the day, the old movie villains could hide all of their money in an account in the Cayman Islands. That's no longer possible. However, what it did for normal Americans is that a number of the financial institutions outside of the United States have decided that they just don't want to work with Americans anymore. The added reporting, compliance, potential of opening up their books to the IRS for audit made them decide it just wasn't worth it for them to work with Americans. We found that banking hasn't been too affected, but offshore investments definitely have been. Then there's the concept of a PIFIC. So a PIFIC stands for Passive Foreign Investment Company. A PIFIC's not a penalty, but it's a tax classification of an investment. So while there's other classes that get lumped into PIFICs, the easiest way to explain that here is think about your current investments right now, you know, specifically like mutual funds and ETFs. Mutual funds and ETFs that are not US registered securities on the US markets will be classified as a PIFIC, and there are significant tax consequences for that investment. So I'll give you an example. If you were to have a brokerage account right now, and that account grows from $50,000 to $75,000 in a year, you're typically taxed only on the money that you take out, and you're taxed at lower capital gains rates. If an investment gets classified as a PIFIC, what's going to happen is that the U.S. is not only going to tax you on the realized gains, which is the money that you take out, but also the unrealized gains as well. That means if you have a PIFIC that grows from $50,000 to $75,000 in a year, you're going to have to pay taxes on that entire $25,000 growth, regardless of whether you take the money out or not. But not only that, instead of taxing you at capital gains rates, which are 15 or 20% in the States, you're going to be taxed at the highest allowable income rate, which is 37%. Because of this, there are significant tax consequences for not having your investment structured correctly. The problem becomes for Americans that have already been living abroad is that they may not have even known that they were invested in a PIFIC. It was estimated that around 90% of Americans abroad were non-compliant with the PIFIC rules and only found out about it after they got a nasty gram from the IRS telling them that they owed back taxes on the PIFIC as well as penalties for not filing correctly. So this is a concept that's super important and one that I want you all to know about and pay attention to as you navigate this journey. So what does this all mean? Well, when it comes to your investments, there are a number of challenges that you'll need to consider. This is where I'll pause and encourage you guys to utilize at the end of our presentation. Like there's going to be a QR code that will take you to a booking link to offer a complimentary consultation. As advice, as we get into some of this stuff, it's really going to depend on your individual situation. Okay. Now, with that said, I've already talked about a number of these issues, but probably the most surprising one of these is the service issues you're going to have with your current U.S. investment institutions. Like we discussed before, how many foreign institutions won't work with Americans. The majority of American companies have decided that they don't want to have to deal with the added reporting and compliance of an American once they are living abroad. Think about where your investments are currently held right now. Each company has different restrictions that they'll impose on each country that you'd be looking to move to. So it's difficult for us to say exactly how they'll handle your situation without a consultation first. However, the Merrill Lynch's, the Edward Joneses, the UBS's of the world, they've decided that they just don't want to work with Americans once they move abroad. So what I've heard from some of our clients is that, like they'll send you a letter telling you that you have 60 days to either transfer your account out or liquidate it out. And now understand, like that's worst case scenario, okay? Most of the other companies will not necessarily force you to close account, but they will reduce the level of service that they can provide you. Again, I can't say exactly what each company is going to do, but a reduction in service can typically mean one of a couple things. Maybe they no longer allow you to buy, trade, or exchange your investments, and all you can do is draw it down. But the investments have to stay the same. Where this becomes particularly worrisome is thinking about, like as you get older, wanting to get more conservative with your portfolio, you cannot rebalance your portfolio. You can't reallocate it. You can't reinvest the dividends. Like you're just kind of stuck to being able to liquidate it down. Okay. Or think about if there's a market downturn, like you can't really make any adjustments in those portfolios. Another thing to think about, if you currently have any mutual funds in your portfolio right now, which most people currently do, those are not compliant to buy or exchange once you do move abroad. Okay. So you're going to want to sit down with one of our advisors and discuss your options of what you have in your portfolio. They're not compliant to have. There are other options available to you, which we can discuss one-on-one, but that's something that you want to consider as you kind of navigate this path. Now, I don't necessarily want to make this all doom and gloom. Like there are absolutely ways for you to invest your money compliantly while you're living overseas. I just would rather you know about the potential pitfalls and what to pay attention to. It's also one of the places that we fit in. We help build out compliant portfolios that allow you to operate financially with little to no impact to what you're accustomed to. Investment and retirement planning are complicated enough as it is. I encourage you guys to at least have a conversation with somebody who not only understands the financial piece, but also how to navigate the challenges of living abroad. For example, a question that we get a lot about is like Roth conversions. The fact of the matter is most countries, including Portugal, do not honor the tax-free withdrawal of a Roth. So deciding what to do with that becomes a little bit more complex than the decision-making process would be in the States. The next question we typically becomes, well, okay, so what options do I have for my current investments? One of the things you're probably going to want to do is ask your current financial institutions what restrictions they're going to put in place when you move out of the country. We work with a couple custodians in Charles Schwab and Interactive Brokers who's made it part of their business model to work with Americans that live overseas. However, that doesn't necessarily mean that they won't limit or reduce your level of service if you don't have an advisor attached to it. They do it because they don't necessarily want you to make any mistakes by investing in PIFICs. But what could happen is they won't give you access to the same choices or ETFs or funds that you had in the States. Now, because we're fiduciaries, they give us access to everything on your behalf. Now, each company has different restrictions for retail investors. So again, I can't say exactly what limitations they're going to put in place. But what I can say is that those limitations have been removed if you have an advisor attached in one of the custodians that I mentioned before. So the next part of it is then there's also the taxation piece. Each country has a little bit different tax treaty in place that slightly affects how each income source is taxed. It's is there a wealth tax? How do they tax retirement income? How do they tax Social Security? Basically, who gets what slice of the pie and how to best maximize that. There's a lot that goes into your roadmap or plan that you want to take into account as you look to move abroad. So here's some common questions that we get. And I know this is not going to encompass everything, but it might give you a good idea of some things that you can and can't do. Again, understand that there's a lot more that goes into your personal situation, that as I explain these, it might not necessarily apply to you, but it's good knowledge to have regardless. So what assets need to stay in the States? It's a personal question, depends on your individual situation. However, it's generally disadvantageous to move your retirement accounts out of the States. You'd have to immediately pay taxes on the entire amount, and as well as the loss of the tax deferral for the most part, it doesn't make sense. How will my employment or retirement income be taxed? Short answer, and again, you're going to hear this a lot. It depends upon your situation. We'll dig a little deeper into how Portugal does some of the taxes, but still, this is a better question to tackle one-on-one. For the most part, income is going to be taxed in your destination country as income. Okay, they each have their own rates for capital gains and dividends, but any income that you bring in from whether it's retirement assets, those are probably going to be taxed at income. So what investments can I make in my destination country? Well, this is one we get a lot. What makes this difficult is the PIFIC rules we talked about before. You need to be really careful investing out of the country to avoid the PIFIC designations. However, there are still options. Real estate is not typically a PIFIC. Individual stocks are not PIFIC. There are also U.S. compliant options that allow you to invest your money offshore that we can discuss one-on-one. So there are options, but you need to be really intentional about how you do it. Let's see. Are there any inheritance tax consequences? Yeah, definitely things to factor in. You know what? And a lot of it depends upon the countries that you're moving to. Most countries will tax inheritances at their own rates if you inherit something while living abroad. There's also a possibility that your destination country will tax your estate, even if your beneficiaries are in the United States. So again, better conversation one-on-one that we might want to get a estate planning attorney involved with, but just some things to think about. And then, it's especially with the times that we're living in right now, how can I protect my assets as it relates to the, U.S. concerns, political concerns, market concerns? There are a number of options at your disposal. From a easy standpoint, proper asset allocation will go a long way to making sure that your long-term plan stays in line with where you need it to be. You've also got, there are principal protected products out there that are guaranteed to never lose money. There's, the offshoring of your investments that we can talk about. So again, a lot of these are more personal in nature, and things that we cover in one of our one-on-ones, but definitely some things to think about. So as far as Portugal goes, again, these are all logistics. We'd always encourage you to talk to a tax advisor in Portugal that has experience in working with Americans, but also a U.S. tax advisor that has experience working with expats. Now, generally speaking, Portugal is going to tax you on global income. I think I did see a question come in there that was asking about how are they going to tax municipal bonds? Portugal is not going to honor the tax-free withdrawals of a muni bond in the States. And they do have higher tax rates. Now, something to think about is just as you start talking through taxation in other countries, this is not something that we're conceptually used to or accustomed to here in the States, but when you move to a country with a higher tax rate, you typically get a lot more for that. And, that's something that I think Victor at the end could probably talk a little bit more about, but, whether it's better healthcare, lower cost of living, better quality of life, better social programs, the nuts and bolts end up being, I won't say roughly the same, but a lot closer than you might realize when you factor everything in. And like I mentioned before, like there is a tax treaty that's gonna assist with double taxation. You're just gonna want to make sure that you understand it and are taking advantage of that to be able to make sure you're not being double taxed. As far as IRA 401k withdrawals, that's all going to come out as income, just like it would be in the States. So the Portuguese tax rates are going to reach up to 48%. It's a progressive tax rate system that, depending upon the amount of income coming in, you may pay an additional solidarity tax. But, again, that's like coming up with what that actual number is going to look like for you is a better conversation with the tax advisor. Now, something about the Roths is that Portugal will not honor the tax-free withdrawal of a Roth. Now, that doesn't make it a bad investment. It definitely still has a place in your retirement plan, But as we talk through Roth conversions and things like that, maybe something to talk to somebody about or reconsider before making some wholesale adjustments to your plan. So that's all the basic stuff. Randy, I'll turn it back over to you if you want to cover the the retirement planning.
Sure. Thank you, Kyle. And the one thing I'll say, what Kyle just talked about before I go into retirement planning with taxes is, when you move to countries that, a Roth IRA may be taxable versus in the States, it's tax-free. Part of the way you look at withdrawing money in retirement is understanding where you're going to be and what tax residency you're at when you're actually withdrawing that money. So, if you need the money while you're in the States, you would take it out tax-free, or before you get to Portugal, maybe you would wait till after you get back to the States if you're planning on moving back and becoming a U.S. tax resident once again. Moving forward, retirement income, we'll talk about retirement because a lot of the people, and I'm not sure on the call today how many are looking to go to Portugal for retirement, but it's probably more than 50% of the people that we do see. And by the way, as Victor was mentioning, places where we come from, if you could tell by the accents, Kyle's from Kentucky and Randy's from New York, if it wasn't given away already. So when you look at retirement income, from the prospect of, hey, I may want to go overseas and retire, for the most part, it's really the same kind of calculus as when you retire in the States. So from a domestic point of view, you would ask some of the same questions, and some of them we'll call risk of, hey, longevity, what if I live too long? The effect of inflation, volatility, what happens when the market goes up and down? Taxes, we've covered on a very basic thing, but when you have a meeting with somebody, you can cover it in more detail into your strategy. And then the other one is currency, which we're not going to cover today, but it becomes pretty obvious as far as, when you're transferring money or receiving income cross-border or setting up accounts overseas, is to understand what the currency effect is going to be, especially when you're looking to buy a house and things like that. So for the next couple of minutes, we're going to concentrate really on the top three: longevity, inflation, and volatility. If you can move next slide, Kyle. This may, I always wonder about doing this slide because it's quite basic, but it works really effectively. So for the people in the audience, the ones who know it, I apologize for redundancy, but it's what's considered the Rule 72. And as you can see from the slide, in a basic form, it means how fast your money or your expenses take the double. So if you're going to earn 6% on your money, your $10,000 in 12 years from now will be $20,000. If you're going to earn 9% of money, your $10,000 in 8 years will be worth $20,000. And that's simple concept for the Rule of 72. So when you look at them, when you look at retirement, the key thing is going to be, how do you make sure that your income is higher than your taxes and the inflation of your expenses? The big issue with retirement counts more towards, inflation of, hey, when I retire, I want to be able to live the lifestyle that I've become accustomed to living to. And what does that look like? As Kyle says, sometimes you look at places like Portugal, you may find the same services less than the States, but either way, there will be the inflation of, what is the cost of meat every day? What's the cost of going to the grocery store, no matter what country you're in? So when you look at, inflation, one of the reasons why we had some political changes was due to the raise of prices and inflation. And, prior to that, we had, basically about 15 years of very little inflation, zero interest rates, which has not been the standard. The standard over the last 100 years prior to that time period was about 4% a year. And sometimes higher for retirees because of the cost of living that has to do with healthcare, as you get older in life. So if you use the concept and, of retirement that I'm age 65, just to pick a number, and I'm living on $50,000 a year, that means that same $50,000 a year, when I'm 83 is going to cost me $100,000 if you wanted to use a 4% inflation rate. That's simple in the concept of it. So when you look at your expenses, it's going to be ultimately important to make sure that your investments outpace that. And some of the ways that you do that is by using, tax deferral and your retirement accounts. Other ways is to make sure that you set up your retirement assets and your income strategies probable. And what that means is, even though you're retiring at 65, if you live for 20, 30 years, you can't afford to have all your money in very safe places, because very safe places like bank accounts won't keep up with inflation, nor can you afford to have money that you can lose into the future. So when we break this down and we look at your expenses and your investments, the same idea of, hey, if I was going to earn 10,000 at 6%, that means it's 20, but is it 20, before taxes or after taxes? So what comes out from that, and that number needs to be above the current inflation rate. Next slide, Kyle. I alluded to this, but this is probably, when we speak to people, this is their biggest concern, whether you're living in Portugal or New York or Idaho, is, when I retire, not only do I want my standard of living to be the same, but, I don't want to outlive my assets. And, what's interesting these days is that people are living longer than ever. You can see from the slide that, if you're a woman age 65, there's, a 94%, 50% chance you're going to live to 88. Into your 90s, couples, as you can see the numbers, but the whole point is that when you retire, it's possible to have a longer retirement life than you did a working life, but during your working life is when you funded the whole ability to retire for forever. So things when you consider doing financial planning, whether it's moving to another country or not, is looking at, where your assets are, where your income is. As an example, Social Security was never meant to be a mainstay of retirement, but it rises about half of inflation every year as an index. So if one of your main, income strategies or sources are going to be Social Security, that won't keep up with inflation, and therefore make sure the proper tax strategies, investment strategies becomes key. Next slide, Con. Actually, if you could do this one and move to the next one at the same time, if you don't mind. One of the big things, everybody, is that, till the last 10 years, I think I was asked to retirement planning to age myself, but, I've been in the financial advisor business since 1988, and until the late 2000s, the financial crisis of 2008, as people who are going with retirement remember, is that every 3 to 5 years, we had a market correction, through 90s, through the 2000s. And ever since, the market crisis of 2008, whereby, the world was really in question as what's going to happen to the banking system, the U.S. and the world has basically operated on zero interest rates, with no real shocks to the stock market, except for a very brief time, as you can see on the slide, with COVID, where the government threw more money at the situation. So when I think about, retirement, you got to accept the fact that, it's not going to be straight up, that, markets are going to go down, and most people my age would say, hey, it's about time. And I'm not predicting the market's going to have crash or anything, but I am predicting there's going to be a lot of volatility, and that, when you get to retirement, you got to make sure that, you're not taking too much risk given, your situation. So you got to once again marry your investment risk with inflation risk along the way. This slide tells you how long it takes to come back once the market, has a big, we'll call it crash, but, let's call it at least 30% down in a given moment would probably be a legitimate, maybe 30 to 40%. And as you can see, the market always comes back, but when you're in retirement, sometimes it's, retiring is lucky, the day you retire or the year you retire, the market's up, you're in a much better situation. The market goes down, you have more to worry about. So it's important to take those things into consideration and not bet on the fact that we're up and away forever, which is what's been the last 10, 15 years. And with that, Kyle, next slide, kind of talked about it a little bit, Kyle's mentioned it, but, one of the things that you have to realize is that, until, last year or so, most of our clients have been Americans overseas, and therefore they've already had problems like PIFIX, as Kyle spoke about, and other topics. You're in a fantastic position to be able to proactively plan moving, so you can, do all the things in the United States before you move without worrying about any difficulties or falling behind the 8 ball with poor investments that aren't compliant with the IRS, as well as some things that you need to take care of while you're in the States. So you'll see our services, 401ks, investment planning as fiduciaries, but there's other topics too which come up. One is annuities, the other one is life insurance, and those come up because those are the things that are kind of able to be purchased and acquired only in the jurisdiction that you're living in. So it's things that you need, you're going to want to take care of it before you leave the United States. It won't be as available to you in Portugal to buy things like life insurance if indeed as a person you need it. So that we'll look at the whole services. It'll be full, holistic, cross-border planning. And, and with that, since we're independent, we have a slide of, we work with a whole host of people, from Charles Schwab, as he mentioned, to Interactive Brokers and all the big companies out there, in support of being able to provide the best services for our clients without any biasness. So with that in mind, we're going to turn it into question and answer period. We have about 20 minutes, I believe, left. As part of coming here, we offer a complimentary consultation, and what's going to happen in that consultation is that you would meet with Kyle, and at that meeting you would discuss what your goals and objectives are, your time frames for doing things, what your assets, liability, and income looks like, and from there, see if he can be of help and guidance to you, and make a decision from that meeting on whether you'd want to, look at hiring him to be your financial advisor. But the first meeting is complimentary to discuss your goals and objectives, and you have an opportunity to do that by this newfangled technology of ScanMe. So thank you very much for the opportunity to speak, and I'll be back with Kyle and the question and answer period.
Thank you. Thank you so much, Randy, Kyle, for this very important piece of content. I cannot emphasize how happy I am and Viv Europe am by having you guys as partners. Such an important topic to cover for people who are moving to a new country, and working with clients that they have set out their financial situation before deciding to apply for a visa makes the process much easier. We did receive some questions beforehand. I'm gonna tackle them very quickly, and there are actually two that are more related to the immigration path that I want to cover before we go to all the questions that you guys sent in this webinar. And the first one is related to the D7 visa. When talking about financial investments, usually it goes hand in hand with the D7 visa, because people have their savings, their IRAs in America. They want more information about the tax part of the process. And just going very quickly about this topic, um, for Portugal, passive income, that is the type of income that you need to prove you have to apply for the D7 visa, is very flexible. So there are many types of income, such as you know um, dividends, financial investments, annuities. They are all considered passive income, allowing you to apply for the D7. Such as a beacon. Viv Europe also has one introduction meeting where we can discuss about the path that you can take to move to Portugal. And I highly recommend to speak to Kyle, to Randy before talking to me, to us, because having your financials in place, having a plan in mind, will make your process to relocate to Portugal and have a good financial situation after moving to the country very clear. So I want to thank you again, Randy and Kyle. So the first one was related to the D7, and the second one I guess it's related to both of our services, and it's related to when should we get in touch with you guys. So this is a very common question. Maybe I can leave it to you and Randy and Kyle, in terms people that are willing to move to another country. When should they start talking to you?
I'll answer that one. There's never a bad time to have a conversation. Would be my first piece of advice. There are some things that it helps to structure beforehand and have some of those in place, especially when you start talking about the D7 visas, to be able to show the income needed. But it's like, even if you've already moved abroad, it still makes sense to have a conversation, because I'm sure that there's either things that you're doing now or investments that you have currently in the States that are restricting some of the things that you can and can't do. So, it's like, it's never a bad time to have a conversation. I would recommend sooner rather than later, as far as when it, like, worst case, absolute last case. If you're moving, I'd encourage you to, that 3 to 6 month mark before you leave would be kind of when you really want to start having that conversation at a minimum. But again, if you've already moved, it's still like, it's still a good time to have that conversation, because we can talk through what we can and can't do at that point.
And that goes the same way for us. Of course, we deal with the process in an early stage. So if you are already in Portugal, means that you successfully moved to the country. I mean, we can even be at your disposal for sure, but the sooner the better. The doing your homework is always good, instead of I guess that comes also in your case, Kyle. The sooner the better. But there's no restrictions. So if they are there, there's still time to manage the finances in a way that would make sense, living in another country. So I'm going through the questions that we've received now, and I can start with the one from Deborah. So Deborah says, if I have money in a Portuguese bank account that I transfer from US, and have already paid tax on that money in US, will I still have to pay in Portugal? It's more like a tax related question. I don't know, guys, if you want to tackle this one. So basically, she did pay tax in America already.
I'll answer, Kyle. If you transfer money that you've already paid taxes on, you're not responsible for paying them again. It would just be cash that landed in the Portuguese bank account. And from that point forward, you would pay tax on the income interest that it earned, but not for that transaction.
That is perfect. That's perfect, Randy. There's one here a little bit more specific. So Charles says he have multiple mutual funds in Vanguard. At least one is global, so it can invest in companies both in and out of the US. Does a global mutual fund held by Vanguard qualifies as a PFIC?
That's helping the
So-
states. Is that the question?
Yeah, I can take that one. So short answer is it's not about where the investment, like the underlying investments in those mutual funds are held. It's more about it being a U.S. registered security. So if it's with Vanguard and it's a U.S. registered security, it's not going to be a PIFIC. Now, where some of the complications will come from is mutual funds are not compliant to buy or trade while you're living abroad, and so you're just not going to have a lot of choices with what you can or can't do with that. But as long as that's a U.S. registered security, then it will most likely not be a PIFIC. But that's a conversation that we can have on a one-on-one, and we can dig in and make sure.
Amazing. Yes, for it also applies for me when there's more of a specific question that applies to you individually. It's always better to have this one-on-one conversation as we can go deep into the topic. And usually those questions here are a little bit more broad questions, but just like Kyle said, best ways to have this one-on-one.
Yeah, if I can add one thing in, a lot of times in these meetings, we get a lot of tax questions as opposed to investment questions. What's important as you move overseas is that, we may not have the answers on tax questions, but where I'll be happy to get them to you because we work with accounting firms just like, Victor does, so that, you have a group of professionals from immigration to taxes to estate planning to financial planning, depending on. So if you have tax questions, probably better off, to some extent getting back to you either through a Portuguese accountant, or we work with many accounting firms that service just U.S. people. I'd be happy to get any tax answers for you. Plus, you may need those services when you move abroad as well, but you don't need them while you're still in the States.
Exactly, Randy. So moving on to the next question. It's funny because there are some questions that some people in the comment already answered them, and they did answer correctly. So not gonna be covering them again. Basically related to Social Security. So there is one here from John Ford. If my Virginia home sales at a profit after I relocated to Portugal, and I invest that profit into a traditional IRA or purchase an income annuity, will it be taxed? Or if so, how? As income or how? I don't know, guys, if you can tackle this one.
You want me to get that one? You got that one?
Yeah.
Or? Me? Oh, okay. I'm not sure. I guess there's two questions in there, if I understand it correctly, Victor. One is when you sell your house, what is the consequence of that? And that is, you will pay a capital gain on the proceeds and the difference of that house. And then when you invest it, you have in that choice an opportunity of an annuity or a Roth IRA for your question. An annuity, a Roth IRA, an IRA is limited to how much you could put in, a year. An annuity is not. So if your, what did I just do here? If your proceeds were more than $10,000, then you'd probably be looking at an annuity would grow tax deferred until you take the money out. And when you take it out, it'd be considered income both in the United States and in Portugal. Is that correct, Kyle?
Yeah.
Okay. Did that answer the question, John? I don't know if you type back in if I understood it correctly.
Yeah. Of course, answering your question doesn't mean you cannot talk to us individually. Go there, just scan the QR code, and I cannot emphasize how important it is to talk to you guys individually. So next one, does Beacon Global Advisors work with TIAA?
We've a number of our clients have TIAA accounts that will evaluate and help them figure out what to do with, depending on their individual situation.
Yeah, we're very familiar with TIAA from doing a lot of public service fund education in our history. So federal employees, we're quite familiar with them.
Good. So moving on, we are coming to our last questions. So let's get the one from Jane. So if we have already moved to Portugal on a D7 visa application, would the purchase of an annuity still make sense?
That goes back to it depends. Yeah. I don't know if if you want to add a little bit more clarification, Randy.
No, I'm sorry. I mean to go over you. I would say, we're not really in a position to say which products make sense for you, don't make sense to you on a without knowing your situation. However, an annuity, if you were meant to buy one, you'd have to buy one while you're on U.S. soil. You couldn't buy one while you're on Portuguese soil. So whether you need one or not, that'd be a conversation I have with Kyle. The clients that we've met that do need products like that already live overseas, kind of say, hey, when are you going to come back to the States? You can do it legally. And hey, I'm traveling back for Thanksgiving, and we take care of stuff when you're traveling back as a means of doing it legally.
And I do have a question because if you guys if you don't have someone to recommend, we can also help here. I can see that there are many questions related to taxes in Portugal. Would you be able to cover those topics in this conversation, or you need someone here in Portugal to manage those topics? What would be the
I
case?
would prefer to table the tax Portuguese topics for a one-on-one, and then we could bring in a Portuguese accountant to get the answers, or if people want to forward the answers to us, we can arrange to get you back an answer from a Portuguese accountant. We work with some, so do you, Victor, whatever one you think is the best reference point, we'd be happy to work with on that.
Good. Yeah, we do have some folks who can help with the tax in Portugal. Yeah, we can do it like an group of good people working together. Moving on. So to the next one, let's get this one from Terry. How does Schwab's or interactive brokerage firms determine which fiduciaries they will allow expats investors to work with? Is this the only option if you want to continue to optimize investments?
Yeah. So, what it's more the designation of being a fiduciary that gives us access to those investments. So that's a better question for your, like, if you currently have a financial advisor, you can, they need to clear through Charles Schwab or Interactive Brokers. But if they have the international expertise, that's more of where it comes in. It's like, from a technicality speaking, like, they may be able to do it. You just want to make sure that whoever you're talking with understands some of the ramifications of working in those two different tax jurisdictions and how PIFICs work, and some of the income strategies based off of the different tax rates.
Thank you, Kyle. I was going over those questions, and I was just waiting to see where is the crypto question. There's always one crypto one, and there it is. I don't know if that is something you can talk about, but how are cryptos profit, taxed, or anything related to cryptos that you can share some information?
I don't know about you, Randy. I'd rather leave that up to a tax professional.
I mean, I'm not. If the question's tax related, then crypto doesn't have a different tax category than a normal stock or real estate would have as far as capital gains are concerned. So I don't think there's any differential in crypto. If you're asking for more of an explanation how crypto works in the markets, I think that's a different kind of cost. But as an asset base, I don't believe it taxes differently than a different asset base would be as far as the IRS is concerned.
Exactly. Okay, so we have here John that mentioned that his question is more related to tax, so he will gonna be getting in touch with us. Okay, so we have this one from Drill. Are there any limitations to buy, sell, or access on X? I guess this is very specific, but X ex-Fed employees regarding to investment in TSP? Yes,
So
this one is
can
like
you repeat that again? I didn't quite understand the question.
Yeah, I think that would be one of those questions that would make sense to talk to you guys individually. But she asks if there are any limitations in regards to buy, sell, or access on ex-Fed employees regarding to investments in TSP.
I'm not sure I understand the question.
I think my best recommendation that's a conversation you can have with the provider and just ask them. It's like, hey, if I were to move abroad, how would my service be impacted? Will I have any changes in my ability to access it or exchange it, make adjustments? That would be my advice. It's like each company has different rules and restrictions with each country, so it's really difficult for us to say exactly how they're going to handle it.
Perfect. Thank you, Kyle. I have this one from Leslie, and I guess you can clear this up, Randy. It sounds like Randy is suggesting that it is advantageous to move all retirement funds to Portuguese investments.
Excuse me? One more time?
She's asking if it's advantageous to move retirement funds to Portuguese investments. I guess it depends, right?
No, the answer would be no. That each country holds their own retirement accounts, and the retirement accounts can't move. So I can't say it's definitely no, but presumably if you are taking money out of your retirement account, you're paying taxes and you're paying maybe penalties depending upon your age. So I'm not sure what the advantage would be to taking a retirement account distribution and putting it into a non-retirement account, which don't have those advantages. So I don't think I would recommend that if I understand the question properly.
Good. That seems to make sense for me as well, Randy. So we have Rubina here that mentioned she already signed up a consultation with Kyle. Good.
Yay, Rick. Good. Awesome, man.
Let's go. So let's get one more. We are reaching the 1 hour webinar. Again, guys, if you still have questions that were not answered, feel free to shoot them to us or to Beacon, depending on the topic. And we have some similarities here in terms of doing business that we always try to help, even if it's out of our area of expertise. We put people in touch with you. I do receive some folks that comes to Randy, for instance, and it's more like an immigration question, and he send it back to me. So it's always feel free to share your question, no matter if you think it's appropriate, because we're gonna try to refer to those people that can help you. So can there be a retirement advantage in keeping two residences, one in Portugal and one in Portugal and another, I guess, out of Portugal? It's I mean, I didn't retirement yeah, I guess it's related to the maybe the social security, if there's any advantage of having two residencies.
No, not for Social Security. No.
Okay, guys, there are many questions still. So I would ask you guys to email us directly. I do have access to the questions, and I will be sharing with both Kyle and Randy, and then you can set up a meeting with them. And I would like to really thank all of you for being here. Thank Kyle, thank Randy for sharing these important topics with this audience, and really emphasize that I do recommend Beacon to be your financial consultant. just get on a call with them. Thank you, Kyle.
very
Thank you,
much,
Randy.
Victor.
Victor, appreciate it.
Thank you,
Wonderful day,
everybody.
everybody. You have a good night over there, Victor. Anybody in Europe, have a great night. Everybody on the West Coast, have a great day.
You too, Randy. Thank you, everybody. You are going to be receiving this video in your email. Bye.
Bye.